Hey world, it's being able to come back to another video. In fact, I want to come back to this video. This is an investment video, some real news. Amazon and Google will be doing what they call a share split. Okay, I think Amazon is doing 20-to-1 split. I'm not quite sure what the Google split gonna be, but what that means, family, is if, like, say, those that's not can't afford to invest in Google and Amazon. And let's understand this right quick. In fact, when you get a chance, make sure you like, share, and subscribe. You know, they got me on the shelf, so there's no way in hell my numbers are this low when I'm getting subscribers, new subscribers every day, but the numbers still reflects the same. But I digress. Family, make sure you're paying yourself first. And like I say, there's going to be some great opportunities out there to invest in companies and invest in different type of, instruments to make sure your money is making money, opposed to just keeping it in the bank and getting robbed blind. Okay, Google is splitting in July. Amazon is splitting in June. I think Amazon has a 20-to-1 split. Now, what does that mean? If you invest in Amazon in June when it splits, the shares are going to be like $115, $120 a share. Right now, right now, Amazon is like over $2,000 a share, right? Who can afford that? You got to ask yourself, why is Amazon splitting? Why is Google splitting? You know why? Because they know the crash is going to come. And they're trying to get themselves in a situation where they can protect a lot of their capital. But while protecting their capital, it gives individuals that are conscious of what's going on an opportunity to invest with these companies. Like I say, June the 3rd, Amazon is going to split 20-to-1. And I think July the 15th, July the 13th is when Google's going to split. Like I say, what does that mean? Once again, Amazon and Google, these shares are like $2,000 a share. But when they split, you're talking about $100, $115 a share. And that's not saying that it's not going to go lower. Because when this market crashes, and I've been talking about this for a long time, that's why I've been saying pay yourself first. There's going to be some great opportunities out there, family. And also, look into something called an ETF, which is an exchange traded fund, and index funds. Okay. Now, what are these particular type of investment tools? Instead of investing in a particular company, you can invest in what they call a bundle of companies based on the particular industry. So let's say you want to invest in pharmaceutical companies. Well, you ain't got to try to be playing craps and just trying to guess and see what company is going to make you money, right? You can find out what ETF has Pfizer, Moderna, all these other companies that are high pharmaceutical companies in one particular stock, which is called an ETF. And so let's say if Pfizer goes down, you're not losing money because you have a bundle of stocks that's going to keep your money safe. Index funds do the same thing, family. So, and the only reason I'm recommending these particular type of investments is because you don't have to guess. Okay, you can get your ETF or index fund that has, technology stocks, pharmaceutical stocks, oil stocks, bank stocks, technology stocks, agricultural stocks. You just look and do your research to find out which one of these particular ETFs or index funds have it. And I got one even better for you, family. Invest in, once the market crashes, because if you notice, it's very volatile right now. Okay? And so what you want to do is pay yourself first, and then once the Dow Jones, the S&P 500, and the NASDAQ drop, these are the three major stock market exchanges in America, right? Once it drops and crashes 40, 50, 60%, because it's going to do that. Then what you do, you just get your S&P index fund, which tracks all 500 companies in America, and just ride it all the way up. Okay? And you get you some index dividend stocks. As well as, the last thing, family, I'm going to tell you is about REITs, Real Estate Investment Trusts. Okay? Now, you ask yourself, okay, if the market's going to crash, then where should I put my money? Well, there are two alternatives, two options. You can invest in gold, silver, right? Or invest in U.S. Treasuries. See, even though we $30 trillion in debt, the United States government always pays its bills, because that's the only way they can assure that that those that are investing will trust it. And so when the market crashes, what do you want to do? Put your money in bonds, U.S. Treasury bonds, U.S. Treasury notes, U.S. Treasuries bills. And the bonds, bills, and notes have different maturation dates. The bonds are 2, 5, 10, 30 years. You have bills that are 3, 6, 7 months, 3, 6, 10 months. And then you have the notes are 6, 9, 12 weeks. And I'm not sure if I do your research, maybe the bills and the notes are different. But I can tell you that the bonds are 2, 5, 10, 15, 30 years. Okay, and so if you're a youngster and you got money, don't put it in banks. Protect your capital. And one way you can do that is pay yourself first, stack your capital, be ready for this crash, and don't guess. If you have a financial advisor, if you have someone that understands the stock market, please pick their brains and find out what it is that they're doing. Because just on a very conservative investment strategy, it would be to pay yourself first, put your monies, right, in index funds and ETFs once this market crashes. And you're going to know it crashes. That's why you got to do your research. Or U.S. Treasuries, gold, silver, all right? So just want to come back with a little information, family, because the research I've been doing, the crash is inevitable. So if your paper is straight, I promise you there's going to be some great opportunities out there for you. All right? So I just want to come back with a little love, a little information. Make sure you like, share, and subscribe. And in the meantime, in between time, may the Most High Almighty bring you joy. And being with us out of 5,000.